Everyone, welcome to Fiscal Voyage. I'm Felix, and if you're new to the channel, make sure you hit that subscribe button and like this video for more content like this. So this video, we're going to talk about a stock that I recently purchased. I've owned shares of this stock, and I actually was down maybe around 15% or so, because it's been going down, and I bought at a good level. And I said in a previous video that I would buy more at a certain level, and it hit that level, and I bought more shares of this company. And I'm gonna show you why. First, I bought shares, and first let's show you the stock is MRK. I bought 25 shares around $2,150. I bought it today at 9:33 at $86. Right now the stock is going for 87.68, so it had a nice day today at 2.43%, and the aftermarket looks like it's up slightly as well. But I'm gonna show you why I bought shares of this stock. First, let's go to fast graph. If we go to fast graph and remove the price, you can see the stock has been very consistent throughout the years. For the past 20 years, been growing at 5.7% compounded annual growth rate. It has a normal multiple of around 14, and fair value is around 15. It currently has a dividend yield of 3.7 and an earnings yield of almost 9, which is great. I like to see this at 6.5 or higher. S&P credit rating of A+, is a pharmaceutical company. So overall, everything looks good. It had a very down year 2023, but it picked it up very nicely as nothing happened. You see here 2022 $7.48, and 2024 $7.65. So it increased in 2022 compared to 2022 in 2024. So if we put the price on the chart, you can see here it's under the normal multiple around 15 over the past 10 years or 8 years, and the fair value multiple. We currently have a price to PE of or price to earnings multiple of 11.2. So that's very nice. You can see here we get revert back to a 15 multiple. We could have a 26% annual rate of return for the next few years, which is outstanding. I like to see that hopefully play out. So that's why I bought more shares. We go to forecasting long-term growth. You can see here five analysts are expecting about 14% annual growth rate, and a normal multiple too. Even we look for the lowest multiple, which will be, looks like 13 here. Even if we have the lowest multiple, like you say, the company doesn't even with the revert back of 15 multiple, in the next few years we get a 13 multiple, 13.9 or 14. You see here you can have a 30% annual rate of return based on the normal multiple and earnings growth. So overall that looks great. I like it. And now with the high yield, right, 3.7, which is great. This operating cash flow covers it. Yes, operating cash flow covers the dividend. Free cash flow, does it cover dividend? Yes, it covers the dividend as well. EBITDA, let's see how EBITDA is. You can see here the stock tends to trade or fair value normally around 13, and you can see here we have an EBITDA around 8.5, which is great based on the historic. So overall that looks great. Fast graph looks good. Analyst scorecard, are they predictable? Yes, they have a high hit rate, high margin of predictability, so that's great. So if are sales increasing? Yes, sales are expected, well, in 2024 they increased 7%, and 2025 they're expected to increase 2%, and 2026 6%, 2027 5%. So sales are increasing. So everything so far looks great. Undervalued, earnings are expected to increase. You can see here 2025 they're expected to grow 18% year over year, and then 9% in 2026. So that looks great. It's predictable, has a great yield. The dividends are covered by operating cash flow and free cash flow. S&P credit rating of A+ with investment grade. So everything looks good. Earnings yield of almost 9%. Great, great, great. So now if we go to some other analysts, CFRA, they give it a 3-star rating of hold. Has an earnings projected growth rate for the next 3 years, 7%. Has a price target at 84, so it's kind of like right at their price target right now. But you can see here, 2025 they expected $9.01, and 2026 $10.25. So earnings are expected to grow. Revenue as well expected to grow. You can see here 2025 65 billion and 71 billion here in 2026. And if we go to fair value, they have a fair value calculation of $96.84. So it has a high fair value rank. So So that's real good. Morningstar, 4-star rating, which is a buy rating, has a fair value of $111, and then the current price at $85. Well, not 85, but actually it was 87. It's a little higher, but still 4-star rating and fair value of $111. So that looks good. And then now technically we're gonna look at well, first let's look at dividend yield. This, I like to see this criteria as well, because a lot of time dividend, based on a dividend, the company, you know, is kind of like a good indicator of when to buy. And you can see here over the past 5 years, the dividend is at its highest. Over here, COVID lows, right here, 2020, the dividend was at 3.3. We're getting better dividend yield compared to COVID low without all the uncertainty. So that looks good. Now, if we go to technically, I'm gonna show you here why I liked it. So first off, we go to the 3-month chart, and you can see here, this was a big resistance point here on $90, $91, and it took the stock from $90 all the way down to $25. So that was a big resistance. And then you can see here, this zone here was resistance here in 2021. It brought it down, and then it finally became, it broke out, got as high as $133, and then it came down. So normally what happens is when a resistance then it's broken, it becomes support. So this is why I bought shares here. You know, originally I bought shares around the $100, and in my previous video I showed you why I bought shares, because of this point here. We go to the monthly chart. We got that point here as well as near the moving average. You can see how it kind of played there in the moving average, the 50 moving average. You had support here, support here, support here, support here, kind of the same thing. So I was kind of expecting the kind of the same area around $100, but no, it just kept going lower. It fumbled around here for 3 months. Expected to go higher because it was still undervalued at that point, but it didn't, and it crashed down to $80 as low as $81.04. And we go to the daily chart. You can see here, the daily chart, you can see here, it got, this was the low, and then this low was bought up strong, and it's been buying up strong recently in the past 3 days. So I bought it this morning around $86 right here, and so yeah, it's up a little bit, and I will buy more if it gets past that $80, get to $70. I will be buying more. That will be the next level of purchase, the $70 range. You can see here, $70. We have the 3-month moving average, 3-month 50 moving average here around the $70 area. So that's where I'll be buying more shares. That's the next level of buying more shares. So right now I'm gonna hold what I have, see kind of what happens. If it fumbles around here, maybe another earnings or two, and it stays in this level, I will be buying more. If another earnings report brings it lower to the $70 area, I will be buying more shares of this stock. So those are the reasons why I bought shares of Merck. You can see here, it bounced very nicely at that $80, and that was from this high point here. So you can see here how $80 was a strong support area. So we'll see if it takes it back high to $100 and see what happens at that point, because we have basically resistance here. The moving average now becomes a resistance point around the $97 to $100 area. We have the weekly as well, moving average here, the 200 weekly moving average will become resistant as well. So we'll see how they handle that area, $100. But I won't be selling at that area. I'll just be holding, and we'll see if it gets to $70. I'm possibly may even sell some cash secure put around, you know, maybe $75 or $70, maybe get some extra cash, because I think it'll bounce for the next few months, maybe get to $100 and see what happens there. Or it fumbles around here, because this is a strong support area. That's a strong candle here, so that looks good there. But those are the reason why I bought Merck. I bought more shares of Merck, because first off, this looks great, fast graph looks great, the CFRA looks good, Morningstar looks good, technically it looks good. So there's a lot of things to like, and that's why I bought shares of this stock. So again, if you're new to the channel, make sure you hit that subscribe button and like this video for more content like this, and I'll see you guys in the next one.